After bouncing from its year-to-date lows, Bitcoin has nudged into negative territory over the past 5 days, but still sitting above 37,000. This as some states consider accepting cryptocurrency for tax payments. To help break down the recent price action in major coins, plus the regulatory landscape, Dominic Dante's CoinDesk market analyst joins us now. Dominic, great to have you here with us today. Help us first and foremost try to figure out if we are going to be range bound in this particular $37,000, $38,000 range, or if you think that we're due for a breakout, given that we struck that $33,000 level last week.
Definitely in a range for now. Volatility has been very, very low. Trading volumes have also been very low, and I know we're heading into the Lunar New Year, so that's taken away some trading activity out of the norm. And we're consolidating here for a while. Indicators on the technical side have reached the most oversold that they've gotten since March of 2020, very similar to equity. So what we're seeing now is a relief rally or a bounce. That bounce has stalled over the past 24 hours. So it looks like buyers are still on the sidelines. There's still some uncertainty regarding the future price direction. There's not a lot of signals out there, although greed or fear has gotten very extreme. So what you really see right now, you're waiting for like a short squeeze of sorts. If price rises unexpectedly, short positions might be forced to liquidate, and that could cause a price jump. However, there's a lot of resistance on the chart, and longer-term momentum indicators are still pointing negative. So upside could be limited around the 40 to 45K resistance level, which gives you a little bit of room for a bounce. February tends to be seasonally strong, but overall, over long term, the trend has definitely weakened.
Dominic, this is Emily here. One of the things that you pointed out as well is that some altcoins are starting to outperform, including Ethereum and Solana. I'm wondering, is the rise of some of these tokens coming at the expense of Bitcoin? And in other words, is there competition and sort of this flow that we're seeing between Bitcoin investors who might otherwise have gone to Bitcoin now going to altcoins instead?
A little bit of that. Bitcoin tends to be seen as a safe haven within the crypto world. So when times of risk off, traders tend to flock towards Bitcoin and abandon some of the altcoins, which are more beta or high risky or more riskier in the crypto space.
Bitcoin is fundamentally a humanitarian movement exposing the greatest con in human history, central banking. That is the view of my next guest. Robert Breedlove is a freedom maximalist, ex-hedge fund manager, and philosopher in the Bitcoin space. He is the host of the What is Money podcast and the founder and CEO of Bitcoin consulting firm Parallax Digital. Robert, good to have you back with us here on Kitco.
Thank you, Michelle. I'm glad to be back.
All right. Well, Robert, you have spent hours and hours analyzing and discussing the origins of money with some of the brightest minds of our times in your What is Money podcast. You go very, very in depth now. I've listened to many of those podcasts. We had a very snowy weekend here in New York, which gave me ample time to really delve into it, and I highly recommend them. But we don't have hours on this particular show. I did, however, want to give Kitco viewers a bit of a crash course in some of the fundamental philosophies. You explore the Cliff Notes version, if you will. So I would like to take this time and unpack some of the points that you made that really resonated with me. And I want to start off with inflation, because last time you were on the show, we discussed the unprecedented stimulus, and you warned that contrary to what Fed Chair Jerome Powell was saying, this will not be transitory inflation. As we know, we now have inflation at a 4-decade high. Even the Fed's preferred inflation gauge, the Personal Consumption Expenditures Index, is showing that prices are climbing at the fastest pace since 1982. And you explain that inflation is in fact theft and that money printing is legalized counterfeiting. So let's start with you breaking that concept down for us.
Sure. So I think inflation is a very muddied term to begin with. People often refer to it typically in terms of price inflation, because that's what we experience in our day-to-day life. But when I use the term inflation, I'm specifically referring to the arbitrary expansion of a fiat currency supply within the protections of a legal monopoly. So what I think is a useful analogy here is if you consider that a stock certificate for a company, right, is a title to a share of that company. So you could say that it's a title to the capital that company represents. So each share certificate is basically a claim on an equity interest in the company. The company is just an assemblage of capital. Money is sort of similar in that it is basically a title to global capital in a way that you can use money to effectively as a call option on any form of capital in the world, right? Money can be used to obtain anything. Another way to think about that, as I've laid out in some of my work, is that because human time is the major, you could say time or energy is the number one or primary input to every economic process that creates anything of value. And money can be used to obtain anything of value. You could effectively say that money is a title to human time or energy as well. So if you have any experience investing or running a private company, you know intuitively and obviously that you would never issue a certain class of stock or shares in that company that could issue new shares to itself and externalize the dilution onto another share class. So you had class A that could print itself new shares, but not be diluted, and basically just externalize the dilution to class B, for instance. If that were the situation on a company cap table, the class A shareholders would just dilute the class B shareholders to zero, right? They just print themselves new shares until they own the whole company. That's obviously insane. No one would ever sign up to own shares in a company that were class B because you effectively have no ownership interest. Yet that dynamic is exactly how the current legacy financial monetary system works. There is one group of shareholders in the monetary system that can print themselves new shares in the form of expanded fiat currency supply. They can then dole out that issuance at their own political whim, discretion, arbitrariness, and effectively externalize all the cost of that new monetary issuance onto users of the currency. That's inflation in a nutshell. It's, if you consider, again, currency as title to capital in the world, if there's one group that can produce new titles to that capital and then externalize the dilution, it's a pretty unfair, unjust, insidious arrangement. So I've referred to this actual phrase became very popular when you say that inflation is legalized counterfeiting, counterfeiting is criminalized inflation. It's the same thing, right? So George Floyd, for instance, I think he was originally attacked by the law for having a counterfeit $20 bill, if I recall correctly. I think that was his original crime. That's a crime, right? Because he's not a licensed counterfeiter. Yet that is the exact same operation that the Federal Reserve perpetrates by the trillion and does it legally in broad daylight. They even hold meetings about it and tell us they're going to do it. And my presumption here is that it's just a generalized ignorance of how money works, that people tolerate this and we discuss it openly, that, what is Jerome Powell going to do next week? Is that good or bad for the economy? Debating as if there were some difference, but in all cases where you're preserving an industry through legal monopoly under the threat of force, if someone else tries to become a competitor in that space, it's always bad. It's always bad for the market because you now have systemized, uninsurable theft being perpetrated against all market actors. You can't, if it was just roadside criminality and someone's, attacking you on the side of the road and taking some of your stuff every now and then, you could actually insure against that. You could have insurance for your business to offset some of those losses and get back to business. But because inflation is systematic and effectively uninsurable before Bitcoin, it dampens the ability for markets to create wealth in the world. So it's like central banking is shackling the economic potential of humanity, in my opinion. And Bitcoin is very important in that respect, in that it liberates us.
All right, before we get into Bitcoin and why Bitcoin is the potential answer to all of this, I want to focus more on fiat currency. And one of the points that you mentioned is how the very definition of fiat currency is a challenge to self-sovereignty, that fiat by definition is by decree. As defined by the dictionary, fiat means an official order given by someone who has power, an order that must be followed, a command or act of will that creates something, an authoritative or arbitrary order. So fiat currency literally means because I said so. So expand on how that is in fact an affront to self-sovereignty.
Sure. So if we just define sovereignty again, it's a word that people traditionally associate today with nation states. It's like, is it a sovereign or a non-sovereign, right? Is the money, people even refer to Bitcoin as non-sovereign money, which I think is a mistake. Sovereignty is not given. It's the authority to act as one sees fit. This is not something that's given to us from government. It's not like humans emerged in the world and there were governments and all of a sudden governments decided to give us freedom and rights and all of these things. That's not how it worked. Humans emerged in the world as individuals, and we assembled our powers and faculties to create social institutions like government. So the sovereignty itself actually, in my opinion, adheres within the individual. So this is something that we give to social institutions, right? In the case of government, we all agree via social contract to say, we're not going to perpetrate violence against one another. Let's give all of the authority to perpetrate violence to a monopoly that will then preserve peace if there's any disputes amongst us. So it's not, people get this backwards sometimes. They think that government grants you rights, and that's not at all the case. To get to fiat, the original term fiat actually came from fiat lux, which was the original decree when God said, let there be light. Regardless of your religious affiliation, like that's where the term came from. And so your definition of it is correct. When humans try to perpetrate fiat onto another, it's literally how you handle your children, right? You say, go clean your room, son or daughter, because I said so, right? And if you have kids, like this is hard for your child to tolerate. And there's better ways to say it actually than say, because I said so. It's, you kind of tell them what's going on and, why they should clean their room, et cetera, et cetera. But if you carry that over to adult on adult interaction, I mean, no one likes that. No one likes to be told what to do. We're all freely autonomous, individual thinking, self-sovereign people. So I think this entire idea of trying to organize human affairs because someone said so, because an authority said so, and behind that, by the way, is the threat of force.
Well, yeah, I was going to say an authority with military might more often than not. Yeah,
exactly. So it's a practice of fear. Honestly, it's like someone's putting, the proverbial or literal gun to your head, saying, "Do this, or else." And the or else could be legal penalty, could be physical, et cetera. But this idea of organizing human beings under the threat of force, again, it's hard enough for kids to accept that from their parents. I tweeted this out earlier. I think it's unacceptable for adults to accept that from other adults in the form of government. And it creates all these negative externalities, which are almost intuitive. Like if you're just a tyrant in your household and you just stomp around telling your wife or significant other or kids to just do whatever you say because you said so, that's going to create some backlash over time, right? Anytime you're not looking, they're going to try to undercut you or subvert you or betray you, whatever. It's just not, you don't have reciprocal human interaction. So it's not sustainable human interaction. We know this at the micro level. General view is that at the macro level, it doesn't work either. And if you look historically, what's happened every time governments get deeper into this fiat game of more authority, more force, more control, more censorship, people abdicate and people defect, they leave, they separate. And then typically the society upheld by that government force fails. So I think the only way we can have sustainable human interaction is through purely mutual voluntary exchange, which is totally absent of fiat.
And of course, that would then put forward the case of Bitcoin, which is backed by peer-to-peer consensus. But before we get into Bitcoin, I want to break down a little bit more about the idea of the central bank. You've said that it is antithetical to the idea of property, that central banks essentially violate the property of some to enhance those of others. And if you could expand on that, but perhaps starting off with the history and the origin of the central bank on Jekyll Island, because I found that to be a particularly profound point when you look at the history and the genesis of central banks and how it links to your bigger thesis.
Yeah, so the genesis of the Federal Reserve was on a small island off the southern coast of Georgia called Jekyll Island. My introduction to this was the excellent book by G. Edward Griffin, The Creature from Jekyll Island. It's a long read, but it's packed with information. There's an abridged version titled Dishonest Money by, I think, Joseph Plummer, that's a little bit shorter. But essentially, and I should say too, the Federal Reserve is not the original central bank. It's the latest implementation. It's the dominant implementation still today. But we've had central banking going back to, I want to say it's the 1600s in Antwerp, where they started this model of centralizing the custody of what was then money, gold, into a single institution, and then issuing banknotes redeemable for gold. This, as I've touched on a lot in the show, was really just human beings working around a technological shortcoming of gold itself. And that gold was just very limited in terms of its portability. It's a heavy, dense physical metal. If you're going to transact in gold with any high frequency, the physicality of gold inhibits our ability to do that. So we essentially figured out, hey, there's economies of scale by just centralizing custody of this metal, issuing paper redeemable in gold. And now we can all transact in this paper at a much higher frequency with much greater ease and convenience, but still have this call option to gold itself. So the central bank was introduced as a mechanism to scale gold, is my general view. The problem with that, of course, comes in that when you have physical gold, you don't necessarily need to trust anyone. You have what's called a bearer asset. So in accounting, we know that assets equal liabilities plus equity. Well, if I hold physical gold, I have 100% equity. It's a bearer asset. It's in my possession. I don't need any body, like any institution, to authorize me to spend that gold, to decree the value of this gold, et cetera. So physical gold carries with it 0% counterparty risk, is another way to think about it, or 0% liability. But once you warehouse that gold and you put it in a central location, and then that institution, the warehouse or the bank, issues you an IOU for the gold, what was traditionally called a warehouse receipt, what we call today banknotes. These were just basically tokens for gold is all they were.
Right.
You've now converted that bearer asset that's 100% equity, 0% liability into something that has a liability attached to it. Because if you go to redeem that gold with your warehouse receipt or banknote and they say, we don't have it, or we've suspended withdrawals, or any number of things, that's when that liability gets realized. So the problem with scaling gold via the central bank is that we introduce the need to trust human beings with the integrity of our money supply. And that's when things come off the rails. Every time we trust people, like we try to trust human nature with securing the most important, most valuable asset in the world, which is money, it becomes corrupt, right? The institution itself becomes corrupt.